Welcome once again to Business 360, reaching you from the beautiful hills of Ibiako, Oran. I am Edidio Martin. Inflation has been the word in the air for a while now. World economies have seen reason their interest rates to try and navigating the murky waters to no avail, as the IMF continues to project a slow global economic growth, conditioned by impacts of COVID-19 lockdown and the Russian-Ukraine war. In light of this, we'll begin our Business 360 outlook today with the EU allowing a get-out clause in Russia gas cut deal. The European Union members have agreed to cut gas use in case Russia halts supplies by some countries, but some countries will have exemptions to avoid rationing. EU members, locked in talks since the idea was suggested last week, have now agreed to voluntarily reduce 15% of gas use between August and March 2023. The Czech Republic president, which holds the rotating EU presidency, tweeted, "This was not a mission impossible." However, the deal was watered down after previously not having exemptions. The EU has said its aim from the deal is to make savings and store gas ahead of winter, warning that Russia is consciously and continuously using energy supplies as a weapon. While away from that, let's look at a bilateral relationship between Saudi Arabia and Greece as they sign an energy deal. Greece and Saudi Arabia will sign a deal on renewable energy and discuss other investments and security, according to Saudi Crown Prince Mohammed bin Salman, also known as MBS, in a meeting with Greek Prime Minister Kyriakos Mitsotakis in Athens. MBS's visit to Greece on Tuesday is his first to the European Union since 2018 killing of Saudi journalist Jamal Khashoggi. He is also expected to visit France next, according to reports. He said that Saudi Arabia can provide Greece and Southwest Europe through Greece with much cheaper renewable energy and get a memorandum of understanding signed. MBS, the kingdom's de facto ruler, whose last official visit outside the Middle East was to Japan in 2019 for a G20 summit, was expected to discuss bilateral ties and matters of mutual interest, according to reports.
It is an opportunity to reaffirm the strength of our strategic relationship. We will be signing important agreements, and we will have an opportunity to further discuss regional developments, but how to further cement this important relationship between our two countries, placing a particular emphasis on economic cooperation. I would like to congratulate you again for your Vision 2030 project, its ambition, and we would like to explore further opportunities between our two countries and our two economies to partner and to attract more Saudi investment into Greece. So it's a great pleasure to be able to...
Well, the US futures has dropped, the stock market has sunk, affecting products like Walmart and the rest. US stocks extended losses yesterday after Walmart cut its earnings forecast, sending other retail shares lower and adding to concerns that consumer spending might not be strong enough to keep the US out of a recession. The Dow Jones Industrial Average fell by 247 points, which is 0.7%. The S&P 500 lost 1.3%. and Nasdaq Composites declined 2%. Walmart cut its quarterly and full-year profit estimates because of rising food inflation. It plunged 8% and dragged other retailers with it. Kohl's and Target dropped 7% and 5% respectively. On the flip side, Coca-Cola shares rose 2.2%. Shares of McDonald's added 3%. Industrial stocks were earning winners too. General Electric posted better than expected results as its shares gained almost 7%. Meanwhile, the Federal Reserve has commenced its two-day policy meeting. Traders are widely expecting a 3/4 percentage point hike and will be looking for clues on the future's interest rate part. We hope to know the result of that meeting by tomorrow. As Walmart shares have dropped, let's see how it's affecting the world's richest family. The Walton family fortune fell $2.9 billion yesterday after Walmart Incorporated slashed its earnings outlook for the first time this year. Shares of the Bentonville, Arkansas-based retailer, which is controlled by the family, stumbled as much as 9.1% in New York, trading after it said adjusted earnings per share will decline as much as 13% this year, with U.S. shoppers reining in spending on big-ticket items amid soaring consumer prices. 2 months ago, the company said earnings per share will only dip about 1%, while in February, it had predicted a modest increase. Meanwhile, the family's late patriarch, Sam Walton, built the business around a discount culture that was in the past. It has helped buoy its stocks during recessionary times like this, and we hope it helps them again. Moving away from that, as the world is on the edge of a global recession, the IMF has slashed the world economic forecast again. In a report, the International Monetary Fund, the IMF, has once again lowered its world economic forecast as it predicted major slowdowns in the three biggest economies, the United States, China, and Europe. It said downturns combined with the ongoing war in Ukraine, inflation surging faster than expected, and tighter monetary policy around the world have continued to slam the already fragile economy. Recall that in April, the IMF had already downgraded its global forecast to about 3.6% growth for both 2022 and 2023. The IMF now expects the world economy to grow just 3.2% this year. This is down from 6.1% in 2021, as the world's top three economies are all facing stalled activity. Well, according to the IMF, next year is going to be even worse. It will be just 2.9%. That's only slightly above 2.5% growth level that the IMF has typically considered a global recession. In the meantime, the IMF retained the 3.4% growth projection for the Nigerian economy this year, despite soaring inflation and the country's inability to cash in on the rising price of crude oil. Well, at this point, let's take a breather. When we return, we'll look at business outlooks in Nigeria. Just stay with us. Thanks for staying tuned. We'll begin our Nigerian business outlook with Access Bank that has secured a U.S. corporation's $280 million support for SMEs. The United States International Development Finance Corporation, DFC, and Access Bank PLC have signed an agreement on a $280 million support for small and medium enterprises in the country. According to a statement issued by the U.S. Embassy, the agreement will address the financing gap for the SMEs. The commitment letter was signed by DFC Chief Executive Officer Scott Nathan and Access Bank Managing Director Roosevelt Ogbonna in Lagos. In his remark, Nathan said the DFC financing for Access Bank would provide needed liquidity given the global economic downturn caused by the COVID-19 pandemic, adding that the intervention was expected to support at least 4,000 new small and medium enterprises in Nigeria. Well, in the meantime, commuters are going to have to pay at least 25% increase in their fares. The effect of the economic downturn keeps ravaging crucial sectors as private sector owners have announced a 25% increase in fares between Nigerian states. This was contained in a memo issued by the Association of Private Transport Company Owners of Nigeria, the APTCON, addressed to operators under its association. According to the memo, private interstate passenger transport company owners of Nigeria are mandated to increase bus fares across all interstate routes by 25% effective 25th August 2022. The memo further clarified that the increase was born out of the downturn that has greatly affected all sectors of the economy, especially transportation. It noted the challenges facing the interstate transport sector to include the price of fueling vehicles increased from 165 naira to 179 naira. That's a percentage increase of 7%. The cost of diesel has risen from an average 250 naira a year ago to above 800 naira today, a 220% increase. Nigeria's inflation hits at a 65-month high of 18.6% in June 2022, significantly increasing cost of operations by at least 50%. The scarcity of forex and high exchange rates have made it impossible for transporters to purchase new vehicles. The cost of spare parts for vehicle maintenance have risen to almost 80%. Unit cost of IS bus have risen from 25 million naira to 37 million naira, and that is a 48% increase. Talking about forex, naira has fallen to a new low against dollar. The naira fell significantly against the US dollar at the official market yesterday, a day after the currency recorded a major gain at the spot market. According to data published on the FMDQ website, where forex is officially traded, naira, which opened at 427 naira 80 kobo, closed at 431 naira to a dollar. This represents a 3 naira 87 kobo increase, or you can say a 0.90% devaluation. This is the weakest rate the currency has traded at the NFX window this year. The new record is 0.2% weaker than the 430.33 week rate the currency closed at on the 15th of July. At the black market, exchanges said the forex scarcity pushed currency dealers to exchange at no specific amount between 670 to 689 naira per dollar. Well, talking about stocks and how the market is going, let's look at the Nigerian capital market. The Nigerian capital market continued to suffer significant losses after the Bars share depreciated by minus 1.86%. The development brought down the equity capitalization by 516.69 billion naira from 27.71 trillion naira to 27.20 trillion naira. After 8 hours of trading, the all-share index dropped by 958.16 basis points to close at 50,400.63. Shareholders raised their investment slightly yesterday, trading 156.16 million shares worth 2.93 billion naira in 4,618 deals. Livestock led the gainers with 1.63% rise in share price to end trading with 1 naira 25 kobo as against 1 naira 23 kobo it started with. FBN Holdings and Sterling Bank also saw share appreciation. Well, at this point, this is the end of Business 360 today. Join us again tomorrow for more information in the business world. I am Edidio Martin. Thanks for watching.